Gold hits $4,000, a record-breaking rally that's redefining global trust in the dollar by Pulse News. Sumper spared, or do från den, Binjan. Updated October 2025. The price of gold has just shattered another record, crossing $4,000 per troy ounce for the first time in history. That's not just a milestone, it's a message. The surge marks a stunning 50% increase in gold prices this year, outpacing even the panic-driven spikes of 1979 and 2020. But here's the twist. This rally isn't being driven by fear of collapse. It's being driven by distrust in the system itself. Let's break down why gold is soaring, who's fueling the frenzy, and what it means for the global economy. A rally. Unlike any other. In most crises, gold climbs because everything else falls apart. Inflation, war, recession, people rush to what feels stable. But right now, the world is in a weird split-screen moment. On one side, the AI-driven stock market is booming. Tech indexes are at record highs, and optimism is spilling over. On the other side, the US government is gridlocked, deficits are exploding, and the Federal Reserve is cutting interest rates even with inflation still above target. That contradiction, risk growth without stability, is exactly what's driving investors toward gold. When Federal Reserve Chair Jerome Powell hinted in August that rate cuts were coming despite persistent inflation, traders read it as a flashing green light. Gold took off, pushing past $4,000 in a matter of weeks. Why investors are choosing gold? Over the dollar, gold's allure isn't just emotional, it's mathematical. Inflation hedge. When the dollar loses value, gold tends to hold steady, safe haven asset. In times of political or financial instability, gold becomes a parking place for nervous money. Inverse to trust. The less people trust governments or currencies, the more they trust a metal that can't be printed. In 1979, inflation pushed gold to record highs. In 2020, the pandemic sent investors running for cover. In 2025, it's not panic, it's policy dysfunction. Runaway deficits, government shutdown threats, and the perception that Washington has stopped caring about fiscal balance are all combining into a slow-burn distrust that's now visible in the charts. Chart 1, Gold Futures, go vertical. Gold futures prices are up nearly 50% year-to-date, far outpacing the performance seen during the financial crisis or even the COVID crash. The rise began early in Trump's second term, cooled slightly in mid-summer, and then erupted after Powell's August speech. Lower interest rates make non-yielding assets like gold more attractive, while persistent inflation reinforces the logic of owning something tangible. In short, investors are betting that central banks will print, the dollar will sink, and gold will hold. Chart 2. Central banks are hoarding gold, like it's 2008. This time, it's not just small investors or speculators driving the demand. Central banks around the world, from China to Turkey to India, are quietly stacking gold at historic levels. Ever since the 2008 financial crisis, these institutions have been diversifying their reserves away from the US dollar, fearing overexposure to a single currency. The pace of buying has accelerated in 2025. As global leaders grow wary of the US's ballooning debt and political infighting. Gold, unlike US Treasury bonds, doesn't rely on political promises. It doesn't default. It doesn't devalue overnight. That's why for many countries, owning gold is no longer a luxury. It's a strategy of survival. Wall Street giants like JP Morgan and Goldman Sachs now expect central bank gold purchases to remain strong into 2026, providing continued upward pressure on prices. Chart 3. The weakest dollar in half a century. For decades, the US dollar has been the world's default reserve currency, the gold standard of global finance. But that reputation is now under question. By one key measure, the dollar just had its weakest first half in 50 years. Part of this is deliberate. The Trump administration wants a weaker dollar to make US exports cheaper and boost trade competitiveness. But markets are seeing something more worrying: eroding confidence. The Liberation Day tariffs in April and the massive spending under the Big Beautiful Bill have deepened concerns over long-term debt sustainability. Investors are now asking a blunt question: how much longer can America keep borrowing without breaking the system? As those doubts grow, gold looks more like a vote of no confidence in US policy, and a store of value that doesn't depend on Washington's promises. What could stop the gold boom? Every boom has a limit. After the inflation spike of the late 1970s, gold's real gains vanished within 2 years as the Federal Reserve hiked interest rates and inflation cooled. That history offers a warning. If the Fed regains independence, inflation falls, and the economy stabilizes, then gold prices could slide sharply back under $3,000 per ounce. But if the opposite happens, if deficits expand, rates stay low, and political infighting worsens, the world could see gold sustain its place above $4,000 for much longer. A global shift in economic psychology. What this gold surge really signals is a global shift in psychology. For decades, investors believed the US system was unshakable, that the dollar would always be the anchor. But now, the belief itself is cracking. Gold's rise is the world saying we don't trust your paper. We trust your metal. That's a fundamental change, and it won't fade overnight. What's next for investors? If history's any guide, the current gold rush will attract both smart money and speculative frenzy. Long-term investors may want to hold steady, but new entrants should be cautious. Parabolic moves often end with painful corrections. Still, if global debt, inflation, and policy chaos continue, gold might be the only thing left that feels real. Bottom line, gold at $4,000 isn't just a financial headline, it's a verdict on global trust. It reflects fear of inflation, doubt in leadership, and a sense that the world's most powerful currency is starting to wobble under its own weight. If history rhymes, the next chapter could bring correction, or a complete rewrite of how the world measures value. For now, one thing's clear: the world's oldest currency just reminded everyone why it never went out of style.